Good morning, traders. It's 8:04 a.m. Chicago time this morning on Thursday, the 13th of July, 2023. Twitter is giving me a hard time posting this morning on TweetDeck. This thing is just constantly changing, and it's my account, but I can't post on it. So I have to go through a whole bunch of stuff to be able to do that to announce today's show. So I apologize. Now, how about now? Testing, testing. Should be okay now. Yeah, I'm not sure why things get shuffled so much between sessions. Baby monitor mic, I like that. Um, Okay, so Twitter was giving me a hard time this morning. Couldn't post, so I'm late. We lost a minute fiddling with this sound. Anyway, let's get down to it here. Thanks for joining me. This is episode number 2501. It is Thursday, the 13th of July, 2023. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, I want to remind you today I'm doing an AMA, a public AMA. The last one was in September of last year. I used to do these about once a week in the early days to try to help people to try to help traders get their particular questions addressed. But you can join me today at 1 o'clock on YouTube live stream. There's no registration, don't need your information. And if you want to submit a question, just point your browser to go to ct.pro/my-question. That drops you into a Twitter thread where you can pre-submit your question. That Twitter thread also has the link to the YouTube video. Really should make this easy for you and put the link to the Twitter video, which is go to ct.pro/FT71AMA. Let me paste that for you here in the live chat so you can join us there. You can go there, set a notification or whatever, but I want to remind you that we're doing this today, and I'd like to see you come in and ask your questions. Okay, let's jump right into the convergent trade pre-market summary sheet this morning. We have a mild risk on market. The indices are trading right at prior highs. PPI came in this morning pretty good. PPI was expected at plus 0.2% for the headline, and came in at 0.1%, so 10 basis points better. But more importantly, the core was expected at 0.2% and it came in at 0.1%, and that's the more important number. Jobless claims came in pretty strong. Expected jobless claims, that is initial claims. This is people who are making a claim for unemployment for the first time. Was expected at 250,000 last week, and it came in at 237,000. So overall, we're in a bit of a climate where inflation is accelerating to the other side. So we have disinflation accelerating. So the cost of goods are going down. This is net positive for earnings short term, and potentially net negative in the longer run, because the inflation pressure comes off because people don't want to spend or aren't willing to pay a higher price for higher prices, and that's likely to impact sales. And we start to come into this earnings season tomorrow with JP Morgan and Wells Fargo kicking off the banking earnings. We did have some important ones this morning: PepsiCo, Progressive, Delta Airlines, ConAgra, Wipro, and so on. Fastenal used to be a stock I used to trade. Um, so those came through, but the big ones are tomorrow, starting with JP Morgan pre-market, and it'll be interesting. We're in an environment now that is very supportive of rallies, but if you look at multiples of earnings, next year earnings, 45.50 or so is expected to be from a fund manager analyst, like institutional analyst perspective for the S&P futures. 45.50 is kind of like starts to make it so that earnings don't justify the price for the S&P 500 on aggregate. That's not an accurate price. It's kind of a ballparkish zone or so. These are all macro kind of ideas that we start with every day because we're looking at economic events and event risk. The market's still digesting that CPI. The market's also pricing, it continues to price in on the Fed Watch tool, continues to price in rate hikes going forward, but it's very much expected the Fed will hike in July and in August. I'm sorry. Wait, when is the? Hang on, let me pull this up. Now I'm spun around between the Fed and ECB and so on. Yeah, July 26th. They're pricing in a 96%, 92% probability of a 25 basis point hike here. You could see it on the screen where it's at 500 to 525, expected to go to 525 to 550, so 25 basis points at 92.4% probability for the July, and this is expected to be the last hike of this cycle. So really interesting stuff here that is very stock supportive, but we've kind of gotten ahead of ourselves a little bit here potentially. So Chinese exports lower than expected. There was a lot of chatter from China this morning that they're just not willing to stimulate, but they're willing to remove constraints for investment. Unfortunately, at the same time, the Chinese president is actually choking off the flow of funds into financially distressed cities whose growth has long been fueled by Western capital. So there's some policies coming in that are pro-China growth. There are policies coming in that are against China growth, and that's China's the big story probably for the rest of the year. UK GDP shrank less than expected. US PPI initial claims were lower. As I said, Meta plans to release commercial AI model in an effort to catch rivals like Microsoft and Google. And Musk announces the new XAI company. Today, what's left? What's on deck? We have Fed's daily. Okay, let's look at that. All right. I don't see Fed's daily here. I see Fed's Waller, but it says Fed's daily at 11:40. We have Fed's Waller at 6:45 p.m. And then we have a bunch of auctions, an 8-week bill auction 11:30, 4-week, and on the 12 we have the 15-year mortgage rate, 30-year mortgage rate, and a 30-year bond auction at 1 o'clock today. Looking at the S&P is in a P-shaped profile this morning. So it opened, what that means is it saw prices as too cheap, undervalued. It moved up and then it met the opposing sellers selling force and it held it there. And so you end up with very thin volume at the bottom and a large balloon of volume at the top, and that creates a P-shape. P-shape profiles tend to indicate short covering, quick spurt before the shorts step in, and they may continue to push through. We'll talk about that in a minute. The inventory is 100% long, so all of that volume, 185,000 this morning, which is okay volume. All of it traded prior to the above the prior day's close, which means the inventory is 100% long, and the point of control is as high as it's been all year, 45, 24, 50. We're accepting that this morning as value. So that's where we stand. Let's move on to the charts and look at what we've got here. So yesterday, because of the way this thing is moving and for me to slow things down, I traded off of I was monitoring all day the TPO chart split and looking at brackets against each other. This is a way of you could do this with a 30-minute chart, but I like seeing it in a profile chart, and we can collapse this, of course, into just a standard profile chart. What this standard profile chart shows is that the market really traded the entire range. It looks balanced. The volume profile is not. The volume profile has some indication of balance in it, but the market really did not find consensus yesterday. The widest set of TPOs yesterday were 9 wide, which by definition is a balanced day. But if you look at a volume profile, it looks very, very different. It looks very squiggly throughout. We'll look at that in a minute. But we've gapped up. We gapped up yesterday. We made a nice little run here. It set up a beautiful short. I talked about this within Convergent Trading at 1550 right here. The D period break in a C period, and then pulling back gave an opportunity for a short 1550, and the catch of this market, this product going neutral, meaning it broke the first hour. Those of you who are not familiar with TPOs, every letter you see on the screen here is a half-hour bracket, and the IB, the initial balance, is the first hour. And the science behind this, or the statistical science behind this, I should say, it's not really science. The statistical science behind this is, or justification behind this, is that most of the big operations that occur within any product occur within the first hour. So that first hour really dictates how the market is participating, and we call that the initial balance. The initial balance can be valid or invalid depending on how it was formed. So if we open and we form, we have a half-hour bar that rips up just like yesterday, open, test down, test up, and then we have the next half-hour bar push through, and then the next half-hour push through. Even though we have an IB, that IB isn't as valid because it's just a moment of time, the first hour ending, boom, and then we put in the initial balance, but the auction is indicating that there is no balance. There is no initial balance because it's running off. So the initial balance, I want to warn you, for those who've been following for a while and haven't heard me say this before, which would be shocking if I didn't say this before, I may not say it often, but the initial balance is not formed. They're not all formed the same. An initial balance, that first hour high and low, is a great place to lean when it was formed properly. In other words, the market opens, let's draw that. Market opens here, goes up, finds sellers, goes down. Well, let me redraw it based on yesterday. So it opened here where this green tick is, that's the open. So whatever it did, what did it do? It pushed higher, A bracket, up, down, B bracket, pushed a little bit higher, and now we have an IB. The IB's from there to there. Sorry, I overdrew this. To there. This is a well-formed IB. So once we break through it to the downside, more often than not, this IB acts as resistance on a retest. It stopped short here, but then it blew through yesterday. It didn't hold very well, and there's good reason it didn't hold well. It's because we're in a gap up environment. So yesterday it ended up giving up this push, and we were looking for, if you recall, 59, 95.50 was the gap mid that we computed, and it ended up putting in a low at 97. So we overstayed our welcome here at 97, and it ended up pushing right back into the 1550 here for a scratch, and then it ended up pushing down and finishing near the lows. But yesterday was a neutral, normal day, indicating that the buyers were exhausted. That's what this chart is showing. It's showing exhaustion from buyers, even though we pushed higher on the gap. It really indicated that the market was just unable to hang on to those higher prices very well. So this morning, however, we are right up here, right against yesterday's high, and holding steady. So what this sets up for us today is pretty good support, right into normally the value high, which today I would be very cautious at. It's too close. But yesterday's point of control from a volume profile perspective is at 45.10, and from a TPO perspective is at 45.10 and a quarter or so. I think that's 10 and a quarter on here, 10.50 maybe. This becomes an important test for support, if not into settle for support. So the expectation is that it does not cross to the other side. And if it does, that creates a great secondary opportunity. Let's say it does fail to do that, it is very likely to catch many more people flat-footed, and it creates an opportunity for us to look for a pullback to short into the prior high, down into the 78 to 76 area. This becomes the target down below for the gap close. Okay, 78, 76. Then we get back into 65 right in here, and so on and so forth, all the way down to 51 is our price map. I can't write worth shit this morning, but that's what it looks like. On the upside, really the biggest value I have on the upside to focus on is the 45.50 up here, the 45.50. So if this thing, holds on, I expect it to be responsive this morning. The volume's okay, and it's 100% long, and we're just outside of the prior range. I expect it to dip right into the range this morning. The VWAP's down at 45.20 or so, and the mid is down at 45.18. I expect it to dip back down and then most likely make an attempt at that 45.50 area, probably with a whole lot of resistance. One of the things we saw on the way up yesterday, unfortunately, I had to restart my platform, so I lost my MBO data. It's very tough to store MBO data. It's very voluminous, so most platforms don't store it. But one of the things you'll note from yesterday, on the way up in the S&P, a lot of lifting into limit orders and absorption, a lot of collisions yesterday on the way up. So if you traded this, or at least watched this push from the low that it put in early on down here, this IB low at 675, and then it crossed the mid, then it pulled back to VWAP right here. That this whole sequence right there, I pointed this out in the Convergent chat room, that there's just a lot of collisions on the way up. It's really struggling. It ended up pushing through and proving me wrong, which happens often, by the way. It's just the way it is. But I saw collisions in here, into the high again, into here. I saw a ton of collisions. on the way up. And to me, this looked like it might fail and ended up pushing through and taking out the IB with even more collisions. And then all of that kind of gave in on that rotation down through the mid and creating that 45, 15, 50 setup short into 97. Would have been nice if it had gotten to 96 just below there, but it didn't. And to me, this is likely to confront the same kind of thing here this morning. I'm going to be watching for how is it chewing through those offers. Are the offers standing in the way and holding steady and getting lifted, and we get this kind of absorption as the market comes up into those offers? Or does it just grab the offers and grab the offers on top and offer, and it just climbs easily because the intensity of money flow into this product is doesn't cannot be withstood by those limit offers. This is order flow trading, and we only use it. We don't use it to make decisions on what our bias is. You know, am I going long or short? It's sitting on my hand. We don't use it to decide whether or not to trade. We use it once we've decided those things. Hey, I'm looking short in this area based on my price map. Let me look at the health of the auction. Then we're starting to look at order flow, the cumulative delta, the quality, the rotations. Those are the things that get us in where we can hopefully minimize our stop for the reward that we had. So that trade to the downside, had it hit the 96 yesterday, would have been a 3.2R trade, solid trade, and we could see that the market was really struggling on the way up. Anyway, I went into a lot of detail here. This is kind of a teaching trader bite, I guess. But what I'm expecting this morning, when you look at the overall intraday picture here, what I'm expecting is what I showed you. I already went over the expectation a little bit here. What I'm expecting this morning is an open auction out of range that quickly dips, and then I'm looking for it to be supported just below this 45.20 into this 15 kind of 15 to 16 area. Okay, go with the flow. We have a gap that held, and then we're opening in a gap above. We're looking for it to bounce back up and then start moving towards the 50. It doesn't mean it'll get it today, but it starts moving towards the 50. If it pushes into the 15, 16 and gets to 10, which is the point of control in yesterday's settlement, and pokes through, then it creates an even better opportunity for a short on a pullback, looking for a weak pullback, looking for a resisted push higher after it breaks through for a flush to take out yesterday's low at 97, push through that 95.50 that we talked about, and then squeeze into this area in the 79, 76. That creates a trade that can run from around 45.08, 45.07, which is yesterday's IB, all the way down to 79.76. You know, a four or about 4R trade with scale outs. Those are the two big ideas for the day, and it's just a matter of watching what it does this morning. I want to remind you, if you have questions about this or anything I'm doing or anything about trading, brokerage, software, whatever in general, if you're making choices and you need support or whatever, just join the AMA today. Be sure to submit your question at go2ct.pro/my-question. And the AMA itself can be found at go2ct.pro/FT71 AMA, FT71 AMA. I'll catch you there. Take care.
like NASDAQ.